Okay, we're back, folks, and I believe we have Bill Chapman on the line from TrendReaction, and I found out this morning he's the twin brother of Basil Chapman. Is that true, Bill?
Basil's my cousin, once removed.
Is he really?
Oh,
I just because of the last name. Gosh, well, if that's true, terrific. Hey,
I'm sorry, I had to mute that because I was laughing so hard.
Hey, listen, I have to laugh in these kind of markets because it's so crazy. I haven't seen anything like this since 9/11. Bill, tell us what you're looking at and what you're thinking. Give us your bird's eye view of what you're watching here in the E-mini S&P.
Because I actively trade every day, I'm watching the market virtually tick by tick. And what we've been seeing over the past couple of days, especially, people don't understand actually the mechanics of the market. So one of the things that we have, for example, Wednesday, within the stock market, you get the margin calls. It's margin call Wednesday. Mm-hmm. And all those margin calls go in and slam the market down. But what happened thereafter on Thursday was quite telling. I have up my chart from Wednesday, which I was surprised to see my sniffer program actually hit at 12:10 when they did the lock limit down, mm-hmm. and the resumption of trading came at 12:11:17. But what I'm witnessing right now is that, and I'm going to make the argument that we're at or near the bottom if the bottom didn't hit yesterday. Because what I'm working with is a number of indicators and a number of technical resources at my fingertips. Patterns, as you well know, repeat, but it's also the elements that make up those patterns that repeat. Now, I've been working the S&P full moon in the 93-day cycle, and you'll always see significant bottoms form around 93, 94, 92, 96 days. And where we are right now is that we're currently at the 96 bar limit. And we are at the low of Boxer Day 2018, which should hold as support. As long as we don't go significantly below yesterday's low, we're working on a bottom. We're going to have some backing and filling. It's what I call stomping on the ice. But I believe just as much as Jeff Gundlach of Double Line that the bottom is in, and it's time to start getting long. There's trillions and trillions of dollars that they're going to throw at this market. The ECB announcing yesterday that they're going to throw 975 billion euros into their marketplace. You just have so much cash liquidity out there that once it starts to go, and once the market goes up another 200-300 points, people are going to see in maybe 5 days that, yep, the bottom is in. The other thing that I'm also watching, I have an indicator that I put together, and it's my exponential oversold indicator. And it has an acceleration factor in it. And anytime, as you see a market start to collapse, the gaps become wider and wider in the marketplace. The spreads become wider and wider. And that's essentially what my exponential oversold indicator is showing. And here, it's at a record high. The only time it's been higher was 9/11. And when you're looking at, this is one of the elements that make up the patterns that we're seeing today. I also have just a simple chart here. It's my mutual fund index, and it's 35 of the best of the favorite mutual fund stocks. And we're working on a divergence between the S&P index and the mutual fund index. Those mutual funds, they're buying out there. You can look at the MACD on the bottom. You can see the divergence there between the S&P index, and the MACD. And we're at a point in time when I woke up this morning and was going through the papers and reading the headlines, and it's music to my ears when I begin to see these headlines that, from the Wall Street Journal, market enters new phase where cash is all that matters. New York Post, Dow closes below 2,000 for the first time in over 3 years. The Financial Times, fear grips the market as faith in interventions runs out. The Washington Post, U.S. markets fall sharply as rampant volatility takes hold. When they all start singing the same song, at least on a media perception, it's time to start lightening up on the shorts and looking for the value plays out there in the marketplace and start to nibble. Because it's going to be maybe 7 to 8 trading days before the press picks up on it. And by then, we're going to have a rise of, 400 or 500 points. And I'm looking at going back to the highs here, back to 30.20. There's just too much cash out there floating. And there are a lot of people who've been waiting 10 years to get into the market, who've been so afraid to get into the market that they're looking at this as their opportunity for all the cash they're sitting on. It's absolutely incredible in living it. I mean, where else in such a short time span could you make 30% on your portfolio in a month?
Sometimes in a day.
Yeah. I thought I was a genius buying the UVXY at 1075 and then selling it at $26. Yesterday I looked at it, it was $126.
Bill, we have a question from one of our listeners, and that is, do you follow the volatility index at all?
I follow the volatility index every day.
Anything you're seeing there?
It's a great, I use it as an indicator to tell me which way, as a front-running indicator for the marketplace. And I'll give you something today if you want a tip. We have prescribed levels here right now on the spiders. We're looking at a possibility run on the downside to a level of 235.97. No, 229.31. 229.31, and on the upside to 241.02.
Wow, that's a big swing.
Yeah.
So you still think there's a possibility it could make a slightly lower low? That's pretty much is what your
It's not going to be by much.
Yeah, okay,
it's not
good. That's fair enough.
Because the between the VIX and the skew, the VIX is showing that the market is going to remain volatile until the prices begin to compress. But the skew is showing that 30 or 60 days out, they're expecting the prices to be much, much higher. Good talking to you, Larry.
Hey, Bill, thanks a lot, my friend. We've got your information on the line, so we appreciate your help, my friend. We'll talk to you later. Bill Chapman, TrendReaction, cousin of Basil Chapman, I think.